am Christina Yvette. I am a passive income strategist. I'm based here in Miami, Florida, and I own a brand called 7 Ways to Wealth, where I teach people how to create different passive income streams so that they can retire at a young age. A little bit about my backstory. I am 32 years old, and I actually retired last year from nursing. So nursing was a very challenging career. Thank you. So I actually retired, at the height of the pandemic when nurses were making $150 an hour. And I decided that I had created multiple streams of income to the point that I didn't have to work in those hard, working conditions anymore, just because I was spending more time in the hospital, 12 hours, than I was at home with my family. So it was actually a good trade-off for me. So today I have 8 different streams of income, and I just want to educate people and teach them that you don't have to work 40 hours and retire when you're 65. There is another way, and that way is to have your money work for you. So you don't have to clock in and clock out and build someone else's dream. You can build your own dream, but you have to do it strategically. So what I'm going to be talking about today is just, creating wealth, okay? And the first thing that I want to do is talk to you guys about the laws of wealth, because there are some laws to wealth that you have to understand and know before you start building wealth, okay? So the first law of wealth is that you keep a part of all you earn, okay? So the money that you make, and that you save 10% of your income. So I know that you guys heard this before, save. Well, it's actually very important. So let's say that you make $1,000 a week, you have to know and be disciplined enough to understand that 10% of that $1,000, $100, is yours to keep. So not all of your money is going to bills, it's not going to the IRS, it's not going to, any of these other places, okay? So you have to be very disciplined when it comes to saving, because saving is actually going to put you in a position to where you can then invest, and those investments are going to have fruitful returns, okay? So save 10% of your income. That's the first law of wealth. So now we'll move on to the second law of wealth. Put your savings to work for you, invest it so that it multiplies, okay? So once you start saving that money, that $100 a week, right, you need to then be able to invest it into, or put it into a place, an investment, to where it's going to multiply, to where it's going to bring back returns. So some of the investments that I do, which I'll talk to you about, is cryptocurrency, right? That's one of my absolute favorite investments. It's actually one of my favorite financial markets. I'm in all the other financial markets as well, but cryptocurrency is new, it's up and coming, it's vibrant, it's digital currency. And so I'll just discuss with you one of my streams when it comes to cryptocurrency. So have you guys heard of staking or farming in cryptocurrency? Okay, perfect. So the way that this investment works is you have a certain cryptocurrency that you own, right? So let's say that you own Bitcoin, and you strategically bought Bitcoin as an appreciating asset, right? So you're buying and holding, right? You buy it at, let's say, 42K, and you're gonna wait for it to go up to 300K. So that's one strategy. But another strategy when it comes to crypto is that you can stake the crypto that you already earned. So you already own this crypto, you already own Bitcoin, and instead of just holding it and waiting for it to appreciate, you can actually lend it for liquidity to these brokerages, okay? So you have brokerages like Coinbase. I use a company called Bybit, which is BYBIT, and that's one of my favorite brokerages. So what you can do is they have a program called dual asset mining, where you're going to pick 2 different assets. So let's just say one of the assets is Bitcoin, BTC, USDT, and the other one is Tether, USDT, right? So you're going to pick this dual asset, and then you are going to invest however much you want. So the minimum is $100. So let's just use the minimum. So you're going to invest the $100, and they are going to give you a smart contract. This smart contract is 24 hours. So basically, you are flipping your money in 24 hours. And the APY is actually astronomical. I don't know if you guys have seen some of them, but they have been as high as like 400%. Yeah, he's nodding his head because he's seen it. I've seen as high as 1,000%. So you choose whichever asset you want. So right now we're working with Bitcoin. And you're going to get into a 24-hour contract. You can do longer if you want, but the APY is lower. Okay, so for 24-hour contracts, they give you higher APYs. So let's just say that you have an APY of 365. That means that you are actually getting 1% a day, right, for these 24-hour contracts. So once you have created your investment, then you just press that button and you've executed a 24-hour contract. And it just depends on the benchmark, how the profit comes to you. So if you are staking Bitcoin, right, and right now the benchmark is at 42K, then in 24 hours, if it's lower, then they're going to give you your return back in Bitcoin. If it's higher than the benchmark, then they're going to give you your return back in the other asset, which is Tether, okay? So that's how it works, and I just want you guys to be aware that there are investments out here that doesn't take that much effort for assets that you already own, okay? So you could be getting 400% a year off of lending your asset to the brokerage so that they can provide liquidity to the market, okay? Because there's transactions that are happening every 3 seconds, and they need that liquidity in order to be able to fulfill those transactions. Okay, so that is an example of one investment. Now we're going to move on. So the third law of wealth is for you to avoid debt. So the poor pay interest and the rich earn interest. Okay, so what position do you want to be in? Do you want to be in the position where you are paying interest? Let's say, for example, like high credit card debt, or you have good debt and bad debt, right? So high credit card debt, or do you want to be in the position to where you are earning interest? So that's why it's important for you to do these types of investments to where you're gaining daily interest, okay? So the fourth law of wealth is do not speculate and get rich quick schemes. So what you want to do is you want to invest in solid businesses, okay? So that's why myself, I invest in the stock market. I know that a lot of you probably invest in the stock market. So my strategy specifically is index fund investing. So have you guys heard of that? Okay, perfect. So with index fund investing, it's passive. So it's actually, you are investing into a fund that is investing into a certain index, right? And there's different indices. So you have the S&P 500, you have the NASDAQ, you have the Dow Jones. So you just choose whichever one you want, okay? And with indexes, they have low expense ratios. Some of them actually have 0 expense ratios. So I invest with Fidelity because they have 0 expense ratios for some of their indexes that track the S&P 500, okay? And who wouldn't want to grow their money for free, right? Because the less fees that you pay, the more money that you are earning. So, so when it comes to index fund investing, it's actually very important for you to also diversify. So I use a specific asset allocation when it comes to this specific investment, okay? So I invest in 6 different indexes, which are actually 6 different asset classes. So the first one is domestic equities, and me, I'm young, so the percentage that I choose for domestic equities is actually 30%. So what are domestic equities? Those are indexes that are here in the United States. So you know the S&P 500 is here in the United States. But when it comes to diversification, which is very important, you don't want to put all of your eggs in one basket. So you don't only want to invest in one country. We just saw with the war with Russia, right, their currency went down to zero. So it's important that you're also diversified internationally as well. So I do 30% in domestic equities, and I choose the S&P 500. Then the next one I do is 30% in REITs. So are you guys familiar with REITs? It's real estate investment trust. Okay, so that is a publicly traded trust that actually owns commercial locations like malls and public storage units and stuff like that, okay? So you are actually becoming a real estate investor, but it's passively. You don't have to go knocking on people's doors to collect, the rent on the first of the month, okay? So you are a passive real estate investor when you are invested in REITs. REITs are actually looked at as very risky, but you get higher returns with them, okay? So I do 30% with them, and then I do international indexes. So with that, there are countries out there, right, that are doing very well. Like, we're driving all these foreign cars, right? These foreign cars are not here in the U.S. Like Mercedes, for example, that's in Germany. So would you want to invest in Germany? Yes. Then the other one is emerging markets. So those are smaller countries that are third world countries like China. China is booming. China is doing very well, right? They have companies like Alibaba and AliExpress. Those are billion-dollar companies. So you don't only want to invest here in the United States with our big companies like Amazon, you also want to invest internationally with those companies as well. And then the last ones are bonds, because you want to keep it safe. And so you have the government that are backing these bonds, right? So you have inflation-protected bonds. So right now, inflation is at its all-time high, right? Does anybody know what the percentage of inflation is? 8. He said 8.3, right? Exactly. Right? It's too high. So it's actually is at its all-time high in the last 40 years. So with that, you want to be, invested in inflation-protected bonds because your dollar is going to stay your dollar. Okay? So now we're going to move on to the next law of wealth. So the next law of wealth is invest in yourself, gain knowledge and skills to increase your earning power. So I pretty much don't have to tell this to you guys because you guys have invested in yourself and you're here today, right, to learn from all of these speakers that are going to be speaking today. But that just goes back to personal development. It goes back to you reading books, you going to conferences and events and networking with people, because that's going to put you in a position to where you're gaining the knowledge in order to increase your earning power, right? Because the more money you make, the more money you get to invest, okay? All right, and now the sixth law of wealth. Safeguard your growing fortune through diversification and insurance, okay? So we just spoke about diversification just strictly in the stock market. I also diversified my entire investment portfolio in different industries because you don't want to put all your eggs in one basket. So you don't want to only invest into real estate and then the housing market crashes like it did in '08. So you also want to allocate your funds into different investments. So I do 20% into crypto, 20% into real estate, 20% into the stock market, 20% into the foreign exchange market, and then the other 20% is either going to go into my personal business or an emergency fund, okay? Or like a high yield savings account. So now that's diversification, and let's talk about insurance. Does anybody here have an insurance policy? Life insurance? Okay. So a lot of people, they are not aware of the power of life insurance. And there's different types of life insurance out there. You have term, you have whole life. So I strategically use my life insurance policy as passive income. I have a policy. It's called an IUL. I don't know if you guys have ever heard about it, but definitely do some research. It's an index universal life insurance policy. And with this policy, it's tied to an index. So it's tied to the market. So the index that I chose is the S&P 500. So now I'm back to investing with the money that I'm putting in my policy. So with this particular policy and the cash value that you're building up over time, you're earning money on it on an annual basis. So since it's tied to the S&P 500, you're earning anywhere between 0 to upwards of 15%, just depending on what the market is doing, okay? So with this being said, what you can do is you can overfund your policy. So there's a strategy behind this. So you can overfund your policy, meaning that you can funnel all of your household bills into your policy. So let's just say, for example, I make $20,000 a month, right? So everything that's coming in, the income, is going to go into the policy, okay? The $20,000, the entire $20,000. And then I'm going to borrow out of the policy, okay? So the $20,000 is going in, and let's say I'm taking the entire $20,000 out. But the cash value is going up. So let's just say that there was $10,000 in there already, and so now it went up to $30,000. When I'm borrowing the money out, I'm borrowing the money from the insurance policy. So I'm not taking from the insurance company. So I'm not taking it out of my policy. So my $30,000 is still in there, and now it's making 10% a year. But I borrowed $20,000 out from the insurance company. And so my money is still growing, but I still get to borrow the money out from the insurance policy and use it for my day-to-day bills. So the money, the cash value is just building up exponentially over time. Okay? Does everybody understand that concept? So it's similar to infinite banking or private family banking, where you're using your insurance policy to fund your entire lifestyle, and all you're doing is overfunding it and borrowing it back. So now, go ahead. Yes, let me talk about that. So your money is actually making like 10%, right? But when you're borrowing it at 3%. So you're still netting 7% annually on your money. So your money is growing exponentially.
So you're not
and there's also that death benefit to it. So like for me, I have a $2.3 million death benefit just because I'm overfunding it by just funneling all my money. And these things are happening like simultaneously. So the minute that something comes in, let's say $20,000 comes in, I put it in and take it right back out. Same day. So there's no delays or anything. So a lot of people, they don't know about this strategy, but you can actually use it to your benefit. And that's when you are now creating generational wealth, right? Because the beneficiary are your children, right? Okay. So that's it for insurance. The next thing that I want to talk about, one of my financial markets, is the foreign exchange market. Okay. So has anybody heard of this financial market? Yeah. Oh, okay. Over there in the back. Okay. Nice. So Forex is short for foreign exchange, and it's actually the largest financial market in the world. So people think that the stock market is the largest, but it's actually the foreign exchange market. So over $6 trillion is being traded on this market every single day. And it's actually our duty to secure a little piece of that $6 trillion, okay? The big players in this financial market are the insurance companies and the banks, right? And the hedge funds. The hedge funds in Wall Street and the big banks like Chase and Wells Fargo. Those are the big players in this financial market. It deals with currency pairs. So you know how different countries have different currencies? Well, this market pairs them together and allows you to trade the pair, okay? So in order for you to get into a trade, let's just say that you think that the currency is going to go up, you're going to get into a buy position. If you think the currency is going to go down, you're you're going to get into a sell position. So that's what the trading aspect is all about. Now, the way that I use this financial market to my advantage is I invest in it passively by having a PAM account. So a lot of people don't know about this. It stands for, it's PAMM, which stands for Percentage Allocation Money Management, okay? And that's when you allow a third party to do all the trading for you. So you have to put yourself in a position to where you are leveraging experts, okay? You can't just do it yourself. So there are, go ahead.
Does that PAM account have an extra service fee, or is it like part of?
Yes, there is. I'll talk about it. Okay, so with the PAM account, right, you have someone else doing the trading for you, and that could be a manual trader or that could be a bot, right? You have these bots out here that are doing trading for you. So with the PAM account, it's 100% passive. So you don't have to trade, you don't have to know how to trade, you don't have to read these charts. All you have to do is just create a brokerage account with a Forex broker, and then that in turn creates your PAM account, and then all you have to do is choose a fund, and whatever fund you want, right? So there is a trade-off, like you said, was the fee, right? So different PAM accounts have different fees. Some are like an 80-20 split for your profit. The one that I'm with is a 90-10 split. So I keep 90% of my profit, and 10% goes to the trading team. That's their compensation, right? They need to be compensated, okay? So now when it comes to that, all you have to do is, the trading team doesn't have the capability to independently trade his account, and my account. That's impossible. So you have to have, so they have PAM services where you have a master account, which is one account. So I have a PAM account, he has a PAM account, and we are attaching it to a master account. The master account is the account that's being traded by the trading team, okay? So it's seamlessly, and that's why it's 100% passive for you, okay? So those are different passive income streams that you need to do research on in order for you to, be able to build wealth. With the foreign exchange market, me personally, I get double-digit returns every single month. So I've seen, my highest month was 51%, right? People are thinking that they can only secure 10% a year. 10% is at its best, right? But you can actually secure double-digit returns on a monthly basis. So that's how I was actually able to retire from nursing, because I put all of these different streams of income in place before I was able to leave my job, because those different streams of income pay me more than what my job was paying me. So it just made sense for me to leave, okay? So that's pretty much it. Do you guys have any questions?
Yes.
Okay.
So it seems like you're very knowledgeable in the space.
Yes.
Within a minute and 30 seconds, can you also explain to the audience, in short, where you came from, slightly, and how did you reach to this point?
Okay. So I don't know what to say. Okay, so me, I am a registered nurse, right? I came from, oh, now I know what he's talking about, okay. So building wealth is intentional. And so I was very intentional about building wealth. So my first job was in McDonald's. And I was flipping burgers, right? But at the same time, my mindset was in entrepreneurship. And so I was thinking, how can I own this McDonald's? And when the CEOs were coming in and out of the McDonald's checking this specific franchise, I would talk to them and say, how can I become a franchisee? And that was at 14 years old. So I already knew that I was going to become a business owner. And I was intentional about it. And so I went to college, decided on nursing. And as a registered nurse, I was already working at a hospital that was short-staffed. So I already had to do 5 days, 12-hour, 5 days a week, 12-hour shifts. And I was only making $21 an hour, and I saved that money. And I was actually able to save, $25,000 to buy my first investment property, which was real estate. I bought that property for $89,000, and I flipped it for $235,000. So at that point, I knew, okay, investment was the way to go. And I grew up, having a hard life. So I told him this story, but I grew up where my parents, they were squatters. So I didn't know that. I just figured that out now, honestly, as an adult. I didn't know when I was, 10 years old why we were living in abandoned homes and abandoned buildings. And it was because we were squatters. But they didn't tell us that at that time. And so I was very intentional about building wealth. And so that's why I have 8 different streams of income, and I was able to retire at 31 years old.
Of not allowing your circumstances to build your future. Look at that. Yeah. You got lots of money. So please tell us where we can find you. She has a monthly subscription.
Yes.
She just worked really hard the past month on it. So tell them a little bit about it so they can find you.
Okay, so my brand is called 7 Ways to Wealth. You can find it on Instagram. It's the number 7 and then Ways to Wealth. And I have a monthly subscription, like she said. I have a membership where you have access to a members portal where you can learn about these different passive income streams. So I teach you how to create a PAM account. I teach you about different crypto investments. I teach you about the index fund investing. I teach you about different businesses that I do. I have a Turo business, a slingshot rental business, an Airbnb business. Okay, so I teach you those things. And then I have industry experts that come in every single Wednesday on Zoom at 7 p.m. and they teach you, different things about investing and social media and, different parts about business structure and business credit and stuff. So that is on Wednesday, and then we also have a book club. The book club is Mondays and Fridays where you're getting that personal development aspect to it, okay? So it's a mastermind. And it's like-minded individuals. So it's entrepreneurs and investors that you're talking with and connecting with pretty much almost on a daily basis, okay? The membership right now is $17 a month because I just launched it, but the price is going to go up to $77 a month. So you can go to 7waystowealth.club if you are interested. And follow the brand on Instagram. Thank you.
I know how to express. I'm fine with allowing, especially the line.
So he pushes me